Welcome back, everybody. It's Tuesday night, and this is Vetted VA Live, where every week we get together with experts in the vetted VA community, both on the real estate and mortgage side, and we cover topics of importance, questions that are coming up, and go and take a little bit of a deeper dive into the information and explain things in a way that hopefully you can understand. Most importantly, every week when we get together here is to answer your questions live. You know, you can go out into the Vetted VA Facebook group, get your questions answered almost 24 hours a day, 7 days a week. But if you want a more in-depth answer, something live here, something video, we're here every Tuesday. And that's what we're going to go through tonight. We're going to be talking about, you may have seen headlines everywhere. Every realtor and loan officer put on their social media about a week or two back when we got the 2024 loan limits. When you hear stuff like that, mainly referring to Fannie Freddie loan limits through the FHFA. Those then trickle down and also impact FHA loan limits. VA is unique, and we're going to talk about a change that was made back in 2020, where for anyone with full entitlement, you do not have any loan limit in VA terms, but there are practical limits. So again, we've got several experts here that we're going to go through everything with. Randy is having a little bit of technical difficulties. Hopefully he can pop in and join us, but I've got Matt Burkhead. Matt, I always forget, you in Arizona?
Yeah, I'm based in Phoenix, Arizona.
Perfect. So we got all of the West Coast covered here. I'm in California. Rylan, you cover Hawaii and Colorado. As you said, you're in Colorado enjoying the snow rather than the warm sun that we would be expecting for you to have in Hawaii. But hopefully after the holidays, you can get back where it's warmer. Matt, why don't you start us off and tell us a little bit about the 2024 loan limits that were just announced that everyone's been talking about, and we can transition to how that impacts VA loans or doesn't impact VA loans.
Yeah, so the loan limits increased. They announce them every year in around November of each year. And then for VA, it actually goes into effect come January 1 of the following year, so 2024. And the loan limit did increase to $766,550, and that was up about $40,000 from $726,200 the previous year. And you know, there's no VA loan limit if you have full entitlement, but if you don't, then these loan limits do come into play, and you have to do a calculation to see, you know, how much you can do with zero down.
Perfect. And I meant to get a picture of the map to share tonight. There is a map showing where high cost areas are throughout the country and what those high cost limits are. If you're in a high cost area, those loan limits can go up to as high as 150% of that 766,550. So that number comes out to almost $1,150,000. And again, that will come into play when we start talking about those of you who may not have full entitlement and are wanting to go to a higher limit. Now, Rylan, in terms of VA loan limits, do we have a limit for someone with full entitlement, and how has that changed over the last few years?
Yeah, absolutely. So in 2019, there was a bill passed called the Blue Water Navy Act bill. And this bill, its intention was to create funding for a whole swath of new veterans, not new, but veterans that weren't previously covered for healthcare benefits, especially during the Vietnam War era. And it was targeting veterans that were not directly in combat, but were serving on support roles. So on ships, in the oceans surrounding and around other countries. And in order to create this funding, they needed to get the funds from somewhere, and Congress wasn't going to take it out of taxes or subsidize it any other way. So they looked to the VA home loan benefit to generate that revenue. And they did that by completely removing the loan limit restriction, rather, that the VA would guarantee if a veteran did not have any other VA loans outstanding at the time. So even if you've used your VA loan before, if you don't have any active VA loans, there is no true loan limit that the VA will stop you and only guarantee up to. One of the most famous examples was a $10 million multi-unit project in Texas. I heard a lender financed it 100%. And so if you find a bank to finance it, the VA says we'll guarantee 25%.
And that's the important part there,
Yeah.
right? So the three of us, we're all brokers. We have multiple sources. Matt, from the lenders that you work with regularly, what's the most common limit? So VA says we'll insure it, but then it comes down to the lender, the investor, of what they will actually insure. What do you see as the most common sort of practical limit on VA purchases?
I would say probably around maybe 2 to 3 million for the most part. I see a lot that kind of cap it at 1 million. I'm sure that will probably change a little bit as the loan limits have increased. But yeah, I would say anything from 2 to 3 million is pretty common amongst a lot of lenders.
And I don't know about you guys. I'm here in Southern California. I do a lot of these loans that previously wouldn't have been able to be done zero down through VA, but I don't think I've ever got one near $2 million. I know they exist, but it's most common, 1 million, which now it would fall under the limits. But when we first got those, anything $1.1 million, $1.2 million, $1.3 million previously wouldn't have been able to be done. And now we're able to help those folks. And I always like to put this stuff in context. The most recent info from the VA for 2023, average loan amount is a little over $360,000. So for most of you that are watching, you may be going, this is insanity. Who's getting a $1.2 million or a $10 million VA loan? But there are markets out there where it matters. For us in Southern California, I had some clients in here this morning. They're looking at buying an $850,000 house. And you go, oh, those must be rich people, depending on where you are in the country. They're first-time buyers. They're 32 years old, husband and wife. They both make good money. And that's what it takes to get an entry-level home in LA County, in Orange County. San Diego County is getting similar. Bay Area, very similar. And that's kind of what I was going to talk about was the map. The FHFA puts out a map every year that kind of shows where they will do these higher balance loans. But for VA purposes, it doesn't matter. It does not matter where you are. If you have your full entitlement, you can go zero down as high as you can find an investor willing to do it. Rylan, you want to walk us through, or Matt, either one? Where does this change if I don't have full entitlement? If I own another property, and this is really another episode about a month or two back, we did this on secondary entitlement, and this is where it starts mattering on these county limits. But when do you want to kind of walk us through what that looks like?
Yeah, so basically bonus entitlement or second tier entitlement is when you have an active VA loan and the VA is charging some portion of your entitlement based on the county that you're going to purchase in the next time. So it has nothing to do with your current VA loan. It's where your next property you're trying to purchase is at. You would look up the county loan limit on the FHFA table. VA has taken the stance that they are going to follow those conforming loan limits for their second tier bonus tier entitlement. And you would do the great math problem that we have, which is divide the entitlement, the county loan limit, by 4. That's going to give you your entitlement. You subtract the county entitlement you subtract your used entitlement, your charged entitlement that you can find on your COE, and you subtract that from the county entitlement. That gives you your remaining, multiply it back up by 4. That's the purchase price that you can finance 100% with a new VA loan in that county. It is specific to the county though, so make sure to check those limits or work with a loan officer who's on top of that for you.
In the context of that, Rylan, you had a unique situation that you kind of wanted to go through, and maybe we can wrap some of these questions into that. When a veteran gets their certificate of eligibility and it says the veteran's basic entitlement is $36,000, that always raises the question. They go, what is this? Can I buy $36,000? What are they going to guarantee? Matt, what is that actually saying on the COE that they have the $36,000 entitlement?
Yeah, so that just means that you have full entitlement. The $36,000 is not like your max VA loan or anything like that. It just means when you see $36,000, you have full entitlement available. So there would be no loan limits restricting you.
And even like it's a funny number because you say the VA guarantees 25% of the loan. So that full entitlement, you go, oh, so I can buy up to $144,000. Well, it kind of is, but then that's not what the guidelines say. You can go, if you have that full entitlement, you can buy the $10 million multi-unit property in Texas if you can find an investor to do it. Rylan, what does it mean? Sometimes they'll pull it. They own a property. They've already used their VA financing. What does it mean when it says their entitlement is 0?
Yeah. So the VA just takes the stance they do not display or show on your certificate of eligibility your bonus entitlement or that extra entitlement for higher cost areas, or even what is today the conforming loan limit, right? And so the 36,000, as I understand it, and shame on me for not having the source, but as I understand it, that 36,000, that 144 was the original limit for the VA home loan benefit. And so when they've added to that over the years to accommodate rising home prices and more expensive cost of living, they just kept that 36 mark. And as Matt said, 36 means you have full entitlement. 0 means you might have some entitlement, but you need to do that calculation based on the county you're buying in.
And I'll go so far as to say the vast majority of loan officers don't know how to do that calculation. And it's not that it's incredibly complex. I've got a neat little spreadsheet that I don't memorize any of this stuff because I get the COE, we look at it, you plug in the numbers, you know where they're wanting to buy, and you get an exact figure. But a lot of loan officers don't know to even check that. So we talk a lot about here on the show that it is important to work with a loan officer that regularly works with VA loans. And it's nowhere more important than here if you're looking at these larger loans, especially if you don't have full entitlement, because the calculation is funky. The first couple times you see it, were you guys like me that you're like, what are we talking about? I mean, we're looking up 14 different numbers and then running an interesting calculation there. So for those of you that are out there watching, if you have any questions, feel free to throw them up in the chat. We would love to walk through it, answer any questions that you guys have live. But again, there's not a whole lot of depth to this, other than since that change was made just recently in 2020, I almost like to compare it to the tax situation for capital gains on your sale the way we used to have. Prior to the changes back in the 1990s, you would have to roll over your gains from a sale into a new property, and then it wasn't taxed. Then it got changed to our current exclusion of $250,000 for a single person, $500,000 for a married person. If you guys are like me, I'll still a couple times a year get a move-up buyer will say, well, hey, we have to roll over all our gains. And you're like, no, it's literally been like 25 years since we've had that change. I look at it like this. Most people have no idea that there's no limit on their VA loan. For you guys, how often do you come across someone that knows that they're able to do the $1.5 million, $2 million, $2.5 million loan? Is it common that you see it, or you still see a lot of people that think we're stuck with the old county limits the way we were prior to 2020?
Yeah, I even see a lot of other professionals that are thinking or have advised that there is still a down payment required based on the old rules. So I mean, it's not just people that are looking to buy, but it's also other professionals that have kind of spread that word around and maybe aren't completely up to date on things.
I tell people all the time, the VA loan appears like one of the most complicated loans out there until you go through the process and learn it. And then it's actually very simple, but you have to have that practice. You have to be working with VA buyers and with VA loans. So like we repeat that, just work with someone who knows the program, isn't dabbling in it, because I have heard, unfortunately, quite a few times someone sees that 0 on the certificate of eligibility and they think they're done. And so, yeah, just ask how often, if you're working with a professional, how familiar are you with the VA home loan benefit? I
think I put my spreadsheet away wisely. Yeah, I restarted my computer, but I was running one earlier when we were going to be discussing this topic. I said, well, what happens if we have someone that doesn't have full entitlement, partial entitlement, and they want to buy a $2 million property? Does it mean they're out of luck? It's not. It just goes back to that calculation. I think the example I threw in, a $2 million purchase, was someone that had used the majority of their entitlement, and they still only had to come up with about a $270,000, $280,000 down payment. And that's not to downplay it. We just talked about $360,000 is the average loan amount. So we're talking about a $275,000 down payment. But in the context of someone buying a $2 million home, to be able to do it with a little more than 10% down, no mortgage insurance, still having the excellent VA terms and low interest rate, especially, after the banking troubles earlier this year, the jumbo loans, we went from we had 5, 6, 7 years where jumbo loans were 0.5% lower lower than any other rate you could get. And now they're a little bit higher. So for anyone playing in this space, if you are a veteran and you're looking for a jumbo loan, even if you don't have full entitlement, this is still most likely going to be your best option in terms of lowest down payment and lowest monthly payment. Let's talk a little bit when we get to these big loan amounts, something that can be a little bit of a tough hurdle to cross. If you have someone, let's say that it is a first-time use, they're not exempt, and they're buying a $2 million property with zero down. Matt, do you ever have anyone that looks at it and they kind of choke when they look at what that funding fee is going to amount to on a $2 million loan?
Yeah, I mean, the funding fee can definitely be a lot at those larger loan amounts. So it's definitely something to be aware about and to kind of factor in when you're running all the numbers with things.
I mean, you're still going to be able to finance it. But when you look at that, you don't just have a $2 million loan, you're going to have a $2,023,000 loan. It's a big line item that people can have a hard time getting over. I would go so far as to say, it's more common for me, the big ones, the people that are exempt, because they come through and they don't have that concern quite as much. And I don't know that I've ever done a really big one with someone on a subsequent use zero down, where they're looking at, a 3+% funding fee. I mean, you could be talking a $60,000 funding fee on the wrong loan if you get to certain loan size. So anything else you think someone considering one of these jumbo size large VA loans should be considering?
So we run into it quite a bit in Hawaii, right? And like you just said, the jumbo VA loan for an exempt veteran, there's not a better loan product out there. Even if they're putting 20 or 30% down, it's simply the best product. You don't have the funding fee. You get all of the benefits like the VA IRRL, VA Streamline Refinance, the lower rates and terms and everything else. And you should always analyze that with your loan officer at the time of purchase, but that's truly an unbelievable product. I've helped a couple of veterans who were exempt buy over 2 million. And yeah, it's a beautiful thing. But with that funding fee, especially the 3.3, the way I like to kind of show my clients, or at least give them some comparison, is that 5% down and getting a break on the funding fee can be huge. And so what we'll compare is what the monthly payment of fully financing that funding fee looks like versus what it would cost them to go get a personal loan for that 5% or borrow from another property through a HELOC or something, and to use their funds to decrease that funding fee. A lot of times, maybe not so much in the past 18 months or so with the higher rates, but in the past when the VA loans were, incredibly low, the funding fee was not costing that much, maybe $200 or $250 a month financed. And so comparing that to, taking money out of an IRA or borrowing against it, the numbers made sense to still finance it. But yes, if a borrower is buying subsequent use and they're not exempt from the funding fee, that 5% is not only going to help your monthly payment, but it's also going to, it's equity you're putting into your property. So it's not a fee. And you're also cutting that funding fee by more than half. So it's a very, very opportunistic thing if you can get a hold of those funds.
Another way to look at it, and I haven't looked at it at any of the really large, 1.5, 2 million, 2.5. But if we look, I think I looked last week and Optimal Blue was reporting that the average jumbo rate was 7 1/8, 7 1/4, and the average VA was 6 1/2. And you guys know we can get better than that, 6 1/4, 6 1/8, 6% on these big loans. Generally, premiums are capped, so on a big loan, it doesn't take much to hit that cap, and you have a very, very low interest rate. So if you go up 0.5% in interest rate, so say instead of 6 1/8, you're at 6 5/8, you could get close to the 2% required to cover someone's funding fee and not add it into the loan amount. So these are kind of the discussions. It's a different discussion than a first-time buyer is having. There's definitely some things here, some big costs that you have some options, whether it be, as Rylan was saying, coming up with a down payment, maybe looking at a lender premium to cover some of it and pay some of it out of pocket so that you're not having to have a $40,000, $50,000, $60,000 premium added on top of it. Matt, any additional thoughts that you have here for veterans considering a big loan that we haven't gone through?
Yeah, I mean, I think that, tying into that, you want to compare what your other options are, because, if you do a conventional, like a jumbo loan, a regular jumbo loan, not VA, then you're going to have a down payment, right? So you always want to compare that to see, what's the alternative. Even though a down payment on a VA loan might not sound great, it probably is better than, the alternative.
I always like to say the numbers never lie. So hopefully whoever you're working with on the loan side is able to do that side-by-side comparison and show you those options. Even if you went out and you went to your bank and got a jumbo number, and then you're looking with a loan officer that's running a VA number for you, plug that into the software. We have some really good software that can show you both today at closing in terms of monthly payment, closing costs, total loan amount, and then how that plays out over a period of time. With that, I think we've covered the topic here pretty well, but we're getting here towards the end of the year. It's an interesting time of year. I don't know about you guys. Most of the people always say to me, well, things get slow around the holidays, right? And it's not so much, because all the people prior to the holidays that put their transactions together, they want them closed before Christmas. So this ends up busy. And that first part of the year is what ends up. How are you doing, Randy? We got our technical difficulties squared away.
Yeah.
Well, perfect. Well, we actually have a question here that's popped up, but what we were talking about here, we're getting towards the end of the year. A lot of people, New Year's resolution is they want to buy a home. And looking at this year is different than a lot of the last few years, where a lot of people stayed on the sidelines. It was a transitional year. Things were different. So kind of what I would like to go around the horn on is what you're talking to clients about, what you think the first of the year looks like, and what people should be taking into account and considering if they're a veteran and wanting to enter the market either as a first-time buyer or a move-up buyer next year. But let's look at Shane's question here. You have a beautiful profile picture. I like the dog. Are you able to recast a VA mortgage? Currently building a new house and looking at VA versus conventional, but our current home won't close until after we close on the new house. So sort of the question behind the question, they're building a house, later on going to sell the house that they have. So they're going to have a chunk to pay down that loan. Do any of you gentlemen actually know VA's policy on the recast? It looks like Rylan, you may have the answer for us.
Well, Randy, you just jumped on. Are you...
I'm here.
Okay. Do you want to take this question?
No, go ahead.
Okay. So unfortunately, government loans do not allow recasting. I just had a client ask this exact same question earlier today. So the VA, you would have to look at possibly doing an IRRRL in the future. If rates fall, you could dump a chunk of change into your loan and then go through a streamlined refinance, which would effectively recast it along with the lower interest rate. But just recasting a loan with your bank, to my knowledge, is not allowed by Ginnie Mae, who subsidize or securitizes VA loans.
Let's talk through that a little bit for them, because there's some things there. If you're not funding fee exempt, well, with the IRRRL, the benefit is you just have the 0.5% funding fee when that comes back around, but you'd be looking at paying a funding fee on the way in. And when you want to bring that down, having another 0.5% funding fee. We've had some experts here. We have Hammer every Wednesday, does sort of the market update of where the market is at. I think most of us do have the expectation. The Fed funds futures market is expecting that rates are going to be lower through next year. But with the VA, we have the recapture requirement. So you can't, if you don't get the market to cooperate, you may not have the option of that. So you are kind of going out on a limb. So in this situation, might be one of the rare circumstances that we talk about that would lean towards conventional, but you would want to do that side-by-side comparison and then determine just how important that recast is.
Mm-hmm. Absolutely.
I am doing all sorts of fun stuff here, trying to get rid of this. So with that, why don't we kind of go back to what we were talking about before? And Randy, let's start with you. You haven't been able to contribute so much, so let's let you go first. When you have folks that are coming to you this time of year or saying, hey, I want to reach out in January and start looking potentially at buying a home next year, what topics are you discussing? What sort of prep can someone be doing now to be ready to buy their first or next home in 2024?
I mean, no different than anything else that we do, as far as just making sure that the credits where it needs to be, making sure that the income documents, etc. Obviously, if they're self-employed, then that could be a big timing type issue, where that they're needing to get the taxes if the average is where it needs to be. Um, just in general, for basically no different than any other time of year as far as that piece goes, unless they're self-employed, and working towards getting a good grip on what the understanding is and where the market's going is probably the biggest conversations that I'm having right now, are more market related, as far as the interest rate having dropped from the middle of October to now, and hopefully we're headed that slow way down the mountain at this point. So
let's say, Randy, you were talking to a self-employed borrower and they're telling you they're looking in the first quarter of next year they'd like to buy. What is unique to a self-employed borrower and that time of year that you would be having
Yep. So obviously, with any variable income, we've got to take a 2-year average. And in the self-employment case, we're looking towards the last 2 years of taxes. So you want to make sure that your any sort of variable income is increasing or at least steady. So it's important that if their CPA has a really sharp pen when it comes to write-offs, that they don't write themselves out of the ability to use that income for mortgage purposes.
And that's a little bit of a tough one for self-employed people to understand, that you're entitled to take those deductions, but you are not required to take those deductions. And what are we talking about? By not taking them, you're paying more in taxes. But from our end, the underwriter is going to go with the deductions that you took. They're not going to say, "Hey, let me see your QuickBooks and make sure there wasn't another $5,000 or $10,000 of deductions there." So it's sort of that balance that we would like to go through. And we've got a comment here, Randy, co-signing for you, that someone personally learned that the hard way, that they are too sharp of a pencil from the accountant can make things a little bit hard come mortgage time. So I love to tell all of our self-employed borrowers, let us get a look at your draft return before you file it. You can amend a return, but you're opening up a can of worms with an amended return versus revising it before actually filing it. Matt, you have any tips or advice for someone getting prepped and getting ready to become a buyer next year?
Yeah, I think one of the good places to start is always to figure out your own personal budget. Don't really worry about what you can qualify for right off the bat. That's something you'll get to, but figuring out what you're comfortable with, right? Because a lot of times people qualify for a lot more than they actually want to spend, right? You might qualify for a $2 million home, but not a lot of people want a $2 million mortgage payment, right? So that's something good to look at before you start getting, caught up in houses and, finding your dream house and everything like that, figuring out a budget first. And then as it ties into this, if you don't have full entitlement and you have partial entitlement, the new loan limits in terms of VA, that goes into effect January 1. So if you're planning on purchasing maybe like right around closing right around the end of December, and you have a down payment because you don't have full entitlement, it might make sense to wait, a week or two into 2024 and close in the new year. That way your down payment would be, decent amount less.
Matt, if you had a buyer in that situation, that it made sense for them to wait, they're scheduled to close December 20th, and you run the numbers and go, well, hey, if we do this January 5th, the numbers are going to be this much better for you. What do they need to do? What do they and their realtor need to negotiate in terms of going to the other side? Because we do have a contract that says they're closing in December. What all goes into that for a buyer and their representatives?
Yeah, so communication is key, right? Sometimes that's just not going to be able to take place, but you want to communicate that with your realtor, who can then communicate that with the seller and all the parties involved. So it might not be possible, but if you're not under contract just yet, it's something good to kind of plan around. Ideally, you'd want to plan ahead of time to where before you even go under contract, you're planning, okay, we want to close January 5th versus maybe December 29th, for example.
Someone here chimed in with exactly what I was going to say when you were talking about this, Matt. But 100%, what the bank says you can afford versus what you can actually afford are often two very different numbers. I'm sure you guys are just like me. People will call and say, okay, here's all my information. What can I afford? We cannot tell you what you can afford. We can tell you what you can qualify for, because in all other respects, Matt and I might be identical. We have the same job. We make the same amount of money. We live in the same area. It doesn't mean that our budgets look the same and we spend the money the same. If one of us has 3 kids and one has none, obviously there's going to be less disposable income. If one of us likes to go on vacation every quarter and go out to dinner twice a week, it changes that budget. So only you can know what it is. And I just, Matt, I don't think we can underscore that enough. But it is really important. Even if you're not a permanent budgeter, do it for 60, 90 days before you go through this process. Because I think all of us don't really know exactly what we spend and where it all goes. And it's helpful when you're determining what you can actually afford in addition to what your loan officer tells you qualify for in going through that. So love that thought. Ryland, from your end, anything that you're going through with folks planning and prepping to buy next year?
Yeah, so I do want to take a little bit of time to actually backtrack back to the second tier entitlement and the bonus entitlement we were chatting with. This is very rare, but it could come up. Let's say that you've used up most of your entitlement, but you still have about $80,000 worth of buying power left. Unfortunately, the VA has taken the stance that the minimum loan amount on bonus entitlement is $144,000. Now, this does include your funding fee. So if you're buying, say, $150,000, you're putting a little down payment because you don't have full entitlement, and the funding fee pushes you back over 144, you're good to go. But if you're gonna intend on just buying $100,000 condos over and over, the minimum is gonna be that 144 mark. So I just wanted to point that out.
And when we did the secondary entitlement episode, Randy, it wasn't you, was it? Someone had a client who had bought like 5 homes using their VA, and was it your client, Randy?
Mm-hmm. Yeah.
Tell the story, because it kind of goes along with what Ryland's talking about here.
Yeah, no, I had a guy that really had a plan from the beginning, been in the service for 20 something years and been stationed at a bunch of places that were smaller markets as far as pricing, etc. And he had done it to the T, where that he was using just the 144 at every station. And he owned 4 homes, and I helped him buy the 5th one. And it was the funding fee that he relied upon to make that one work, just like you're talking about. So it was like he was a genius, and we did it in January so that we'd get the additional entitlement available for the new limit. But it was like, a magical 5. He owns 5 homes now. And interesting enough, he invited me the other day to his retirement. So he's walking away with 5 homes after doing this thing right. And they've all appreciated, but they've all appreciated because it's over a 20-something year span. But it's a cool way of someone that really had a plan from the beginning and worked the plan.
Well, it was funny, Ryland, when you brought that up earlier when we were putting the outline together, I didn't think about it, but I was like, I'm pretty sure it was Randy's client that had done that. So it's great that we got both of you today.
Yep.
That's awesome. But yeah, for the beginning of the year, you gentlemen have nailed it perfectly. Just getting with your loan officer, having that draft of the taxes if you're self-employed. The government does not care if you write off less things. So there's no, it's not gray area. It's not anything wrong with just claiming less deductions. If you pay taxes on it, the government's good with it, and the banks can then use that income. So don't be shy about that. It's kind of strategizing with your loan officer. And in regards to the approval, you guys nailed it. I tell people all the time, I'm going to tell you what the computer says you qualify for. You're going to tell me what you're comfortable paying. If the computer's higher than that, great. Go shopping in your budget range. We're going to tell you where to stay to be there. If I can't get you to your budget range, I'll help you create a plan to get you there, paying off debt, savings, etc. But that way it kind of frames them that the ball's in their court, but they're also the ones that need to make that decision of where their comfort ranges are. And I also like to point out that just because you're comfortable with a certain rent, when you own a home, you need to account for repairs, and you need to account for maybe extra utilities that you don't have when you're renting. Those might be included. And when you buy, those things might not be included. So just having that, like you said, even if you don't do a budget, do a 60 or 90-day budget if you're considering buying, especially your first time, because it'll really show you where your money's going and how you're spending it.
Ryland, part of, piggybacking off of what you said there, we did an episode of our podcast last week, the true cost of moving that you need to be aware of. So things like actually moving. One of my realtor partners just moved, and he's like, we moved from one side of a development to the other, but you had to rent a pod. We spent $500 in boxes and packing equipment, so nothing got broke along the way. We hired a crew to pack it up, unpack it across the other way. So VA is awesome in that you can truly get in with zero down. We can get other people to pay all your closing costs, but there's going to be something there. And then in terms of that budgeting piece, it kind of pulls it back. I don't know about you guys, but for some reason, a lot of buyers really want to push off the insurance conversation till the very end. I would almost start talking to an insurance broker or your insurance agent very early in the process, because depending on where you are in the country, if it's a wildfire area, other tornadoes, flooding, any of that stuff, the insurance could be vastly different than what you're expecting, and that can affect your affordability and your qualifications. So really just take this time of year to get all of your ducks in a row and do all of your research. I think in the context of tonight's conversation, it's both simple and complex. The simple answer is, hey, if you have full entitlement, there is no limit. Your limit is what you qualify for. But if you don't have full entitlement, there's lots of ifs, thens, gotchas, and that fun stuff. And it's where it's important to work with someone like we have on here tonight that really is an expert in the VA guidelines. So with that, I think we've covered it all. But any last words? Anything you guys would like to leave anyone with? It looks like Ryland's got last words for us.
I want to give a quick shout out in regards to planning that move. Vetted VA has a ton of great resources, one of them being the perfect PCS, whether you're a homeowner or a renter, and a lot of things that are included in this training just to think about and remind you of as you're going through that process. So probably we can drop it in the comments or in the captions, a link to those free Vetted VA resources. It covers credit repair and all sorts of different stuff. Check it out for sure.
Awesome. Before we let it go, I'll find the link and try and drop them in here. And again, just sort of a last reminder here, if you're a veteran and you found this on YouTube somewhere and you haven't found your way into the Facebook group, go join the Vetted VA Facebook group. Literally, I don't even know if we printed the whole thing out. We've got like encyclopedias of questions and accurate answers to almost anything you would want mortgage and real estate related from people around the country that know what you need to know. So gentlemen, I appreciate you joining us tonight and helping answer these questions and educate everyone. For those of you watching, we'll be back again next Tuesday with another crew of experts. Any questions you have, either on topic or off, as long as they're real estate and mortgage related, we would love to answer them. So if I don't talk to you three gentlemen before then, happy holidays, Merry Christmas, Happy Hanukkah, Happy New Year's, all of those things, whatever you may celebrate. But I'm sure we'll have you back here at the first part of 2024 answering some more questions. All right. Have a good one, guys.
Aloha, guys.
Thanks. Have a good one.